NIO stock has had a bit of a reality check today. After a promising stretch where it looked like the $5 mark was back in play, we saw shares pull back by 3.58%, closing at $4.45. That's a 17-cent drop on the day, and while it might not sound huge, it does feel like a meaningful move in the context of the recent price action. This decline came without any major company announcements, earnings updates, or big macro headlines tied directly to NIO. That tells us a couple of things. First, the move is more about market behavior, positioning, sentiment, and technical levels, than about fundamental changes in NIO's business. And second, it's a reminder that stocks don't move in straight lines, especially ones that have been as volatile as NIO. When we zoom out, this pullback is happening after a series of rebound attempts where NIO tried to climb above resistance in the $4.60 to $4.65 zone. Over the past week, we saw the stock gather some momentum, particularly after bouncing off support near $4.50. That gave traders and long-term holders alike a reason to be optimistic about retesting the $5 range. But today's fade shows that sellers are still active, and profit-taking is a reality in this environment. Now, I want to stress something. This move doesn't necessarily mean the bigger picture has changed. It could simply be a reset, a cooling-off period after the recent climb. Stocks often need these pauses to build the kind of base that can support a more sustained move higher. The danger is if that pullback starts to snowball and we break below key support levels, which could invite more selling pressure. Let's talk about those levels. Right now, the $4.40 to $4.45 zone is acting as a near-term support area. This is where we close today, and it will be critical to see if buyers step back in here. Below that, there's some psychological support at $4.30, but that's not nearly as strong. It's more of a line in the sand for short-term traders. On the upside, the $4.60 to $4.65 range remains the first real resistance, followed by $4.80, and then, of course, the big $5 milestone that's been teasing investors for weeks. What's interesting is that this pullback isn't happening in isolation. The broader Chinese EV sector has been mixed, with XPeng and Li Auto both seeing their own fluctuations. That tells me part of what we're seeing in NIO is linked to sector sentiment. When the market mood toward Chinese EVs turns cautious, even without a big headline, it can put pressure across the board. On the macro side, we're still dealing with a complicated backdrop. Global growth concerns, the trajectory of US interest rates, and ongoing questions about China's economic recovery all influence investor appetite for names like NIO. Add in the fact that the EV space globally is in a price-competitive phase, and you get a recipe for short bursts of optimism followed by quick retreats when traders sense momentum slowing. But here's the flip side. The fundamentals we've been talking about in recent videos haven't disappeared. NIO is still executing on a strategy that's meant to strengthen its position over the long term. The company is expanding its battery swap network, which is already the largest in the world and a key differentiator from rivals. They're launching the Onvo L90 under their new mass-market brand, targeting deliveries from August 1st, and this should open the door to a larger customer base. We also can't ignore the operational discipline message NIO has been sending. Management has laid out a target for adjusted operating profitability by Q4 2025, with a goal of bringing operating expenses down to under 10% of revenue from roughly 24% today. If they can make good on that, it would mark a significant shift in the company's financial profile. From an investor psychology standpoint, days like today are always a test. When there's no big negative headline but the stock still drops, it forces you to ask whether your conviction is tied to the daily price action or the underlying story. If you're trading NIO purely on technical momentum, then sure, a 3.6% drop might tell you it's time to lighten up. But if you're in it for the longer-term growth narrative, then this kind of pullback can look more like a normal part of the journey. Short interest is another factor worth noting here. While it's not at extreme levels, NIO does have a base of short sellers who take advantage of these sentiment dips. When the stock gets close to a resistance zone and starts to lose steam, shorts compress their bets, adding to the downside pressure. The flip side is that if NIO can quickly reclaim lost ground, those shorts can be forced to cover, creating a burst of upside. We've seen that dynamic before in this stock. Heading into Thursday's trade, the key questions will be: can NIO hold the $4.40 to $4.45 zone? Will broader sector sentiment improve, giving the stock some tailwinds? Are there any upcoming catalysts, either company-specific or macro, that could shift the mood? On that last point, while there's no immediate earnings report on deck, we do have ongoing developments in the EV market that could influence sentiment. Policy signals from Beijing, especially regarding support for the EV sector or price competition rules, could be meaningful. And in the US, any moves in interest rate expectations could ripple through growth and tech-oriented names like NIO. In terms of a trading mindset, if you're looking at NIO purely as a short-term setup, then tomorrow's open will be about gauging follow-through. A quick bounce back toward $4.50 to $4.55 would suggest today's drop was more of a shakeout. But if we slip under $4.40, it could put $4.30 in play and even raise the risk of retesting the lows from earlier this summer. If you're thinking longer term, though, it's worth stepping back and remembering why NIO remains in the conversation despite all the volatility. The company has a multi-brand strategy designed to address different price segments of the EV market. It has an infrastructure advantage with battery swapping that competitors haven't matched. And it's making a concerted push toward cost efficiency and eventual profitability, even in a challenging competitive environment. The bottom line? Today's 3.58% drop to $4.45 isn't the end of the world for NIO, but it is a reminder that the road to recovery in a volatile growth stock is rarely smooth. The absence of any major news catalyst means this move is more about positioning, sentiment, and technical trading than a shift in the company's fundamentals. If you've been watching the $5 level like a hawk, this is the kind of pullback that might feel frustrating. But sometimes, the path to those psychological milestones requires a reset. Whether this is just a quick pause before another attempt higher, or the start of a deeper consolidation, will depend on how the stock behaves over the next couple of sessions and whether the broader EV market can lend a helping hand. So as we head into Thursday, keep an eye on that $4.40 to $4.45 support. Watch for signs of stabilization or early buying interest in the pre-market. And remember, the big picture hasn't changed. NIO is still in execution mode. It's still building out its brands, infrastructure, and cost discipline. The day-to-day tape might be choppy, but the story is still being written.